and welcome to the OANDA MarketPulse charting analysis video. My name's Craig Erlam, Senior Market Analyst at OANDA. Now, it's been a really interesting day in the markets today. It's been primarily driven, or the broader markets have been primarily driven once again by the moves in oil prices. Now, this is something we have noticed really, or we have seen in recent days in particular. But I think today was very key. We saw oil pull off earlier on in the session in negative territory and really dragged equity indices down with it, and also some of the commodity currencies as well. From there, we did see a rebound in oil, and we've seen similar moves, of course, in the indices and also in some of the commodity currencies as well. And the correlations between the two are quite key at the moment, and it's something that you really need to be considering when if you're trading the commodity currencies right now, or if you're trading the indices. You need to be keeping a close eye on things like gold, on things like oil, because when you see a big reversal in these, then the other tends to follow suit. So speaking of this, I will start with oil. Now, I've got Brent Crude up here, and I think there's a couple of quite interesting things that we need to be keeping an eye on here. Now, initially, the first thing you see when you look at the crude chart is the fact that it's in a very clear downtrend. Now, what we saw when crude rebounded off its lows last week was it came up towards this 50 fib, which being from the highs, 50 fib of the highs from January 4th to January 20th. It rebounded, it bounced off this level and also the 21-day simple moving average and moved lower. Now, initially, you may think that this looks quite bearish, and of course it does. This is a downward trend. We're seeing a bounce off a key moving average and off a key fib level. That tends to be an indication that the trend is continuing. Now, but what I found interesting yesterday was a couple of things. Firstly, if we just zoom in a little bit here, firstly, we didn't see a close below below Friday's lows. Now, if we had seen a close below Friday's lows, then you could have looked at this and seen that it's something, well, it's not perfect, but it resembles a bearish engulfing pattern, because we've opened near the high and closed near the high Friday. Well, we've opened at near the high Friday and closed below its opening levels, but we failed to close below its opening levels. Moreover, we failed to trade below its low on Monday. So the fact that we've got this the fact that we failed to do both of these does just take something away from how bearish this actually is. Now, today we have snuck below the Friday's lows, but only very briefly. But what's interesting is we've actually rebounded higher from there. Now, if we take a closer look in, say, on the hourly chart, you'll see that what we actually did today, not only did we just did we rebound from Friday's lows, we also rebounded off the 61.8% retracement level of the move from those lows on the January the 20th to the highs on January 25th. Now, this isn't in itself necessarily mean that all of a sudden Brent Crude is bullish. Of course it doesn't, but it does give an early indication that it may be more bullish than we previously thought. The fact that we have rebounded off to 50 fib, it hasn't been entirely quite as aggressive as we may have hoped. The fact that we've seen an immediate reversal to the upside off of Friday's lows suggests to me that maybe this correction is going to be a little bit broader than the markets initially anticipated come Monday. So we rebounded to 33 previously. Maybe this suggests we are going to see a move maybe back towards 35.50 or even towards 38.50, at which point we are looking at prior support levels or prior resistance levels and descending trend lines, which, as I've highlighted on previous videos, actually take us all the way back to the trend which began back on June 23rd. So we could be in for an interesting 24 hours really in crude, because if we see a breakup of this 33s, then I think 35.50 could easily be on the cards. Now, as I have previously highlighted, other moves in the markets tended to be dictated by the moves in crude over the last, in recent days or even in recent weeks, and the same is true of the Dow today. So we did see early declines in the session, but we did see it rebound off these lows, and what was interesting once again is that we rebounded off a key fib level in the Dow as well. So like the symmetry is very interesting here, and what makes this bounce even more perfect was the fact that we had this nice bearish candle leading into the 61.8 fib, followed by a candle of indecision having bounced a couple of points above the 61.8 fib, granted, but we saw this period of this candle of indecision around the 61.8 fib, and a nice bullish candle after. This is such a nice morning star formation on a key fib level. again, that really does just suggest that we have seen these bottom out, at least for now, and we are going to see a reversal to the upside. And following this, it's been such a nice bullish day. A lot of green candles here, and we've now taken out the highs from Friday. So you see on the daily chart now things are starting to look a lot more bullish, but the early warning signs were there. We did see the bounce off the 61.8 fib. We did see the bounce off the ascending trend line as well, which at one point traded below. We also saw the morning star formation, and following there, it's just been all green from there. So really, this is looking a little bit more bullish now. Now, I'm not going to be kidding myself here. This could just be a bit of consolidation or minor correction, and really the broader trend could still be in place. The broader trend is still quite scary, I guess, for the likes of the down stuff of things at the moment, because we are just trading around the trend line from which bases itself at the financial crisis lows in 2009. We've also pulled back to some key support levels here, which have been heavily tested, but this is potentially an early sign that we are going to see, at the very least, maybe a correction following what has been quite an aggressive sell-off at the start of the year. Moving on to commodity currencies next, and as I've highlighted, the move in these commodities do tend to have had a bigger impact on the broader market. Now we've got commodity currencies, the Australian dollar, Canadian dollar, two big commodity currencies, and as we've seen in crude, we have seen a rebound today despite some early weakness in the Australian dollar against the US dollar. Now, I don't think this bounced quite as perfectly off these 50 or 61.8 fib levels, but what is interesting is those the 61.8 fib level, and in between the 51 and 61.8 did coincide with prior support and resistance in this pair. So this was always going to be a very key region of support for the Australian dollar. Now, the rebound off this level on the hourly chart wasn't quite as perfect or aggressive as in other charts, but we did see this is a clear, I think, the fact that it's such a key support region, and especially once we saw these previous highs taken out, so around these 69, 70 levels, prior support, prior resistance, once we saw these taken out, I think it was very clear, and we even got a nice little retest in the meantime. So we saw these 69, 70 levels taken out, we rallied up towards 69.85, and then we saw a nice little retest of 69.70, at which people started to buy into this again, and now we're moving back up, we're testing these 70 levels, again, a nice psychological level in the Australian dollar. But really, the key test now, I think, is going to be these prior highs. So you're looking at 70.50. So 70 to 70.50 is now going to be key. You can see that this was key levels of resistance both on January 13th and then again on January 22nd. Prior region of support as well back in November. If we can see this broken, then we'll, in the short term, be looking maybe towards these 71s again, prior support. But we could potentially be looking for a much broader correction. This still looks relatively bearish to me in terms of the broader trend, but that doesn't mean we can't have some upside in the meantime. The final point on this Australian dollar chart, actually, which I think I highlighted in one of the previous videos, is it looked as though we were potentially shaping up for an inverse head and shoulders. Now you can see that the heads form nicely here at 68.30, the shoulders forming at this support region here. So this is around 69.30 and 68.30 for the head, and the neckline here at around 70.50. If we can see 70.50 broken, taking out those prior highs, then this could be a very nice technical chart, because great things about these head and shoulders and inverse head and shoulders is they tend to give you price projections or what when you see these form, then you tend to see similar. You can quite often see similar moves after these key levels are broken, being the necklines. Now, the great thing about this chart is it'll give you a conservative price projection and a more aggressive price projection. The conservative price projection tends to be the level from the shoulder to the neckline, which in this case is 69.20, say, to 70.50. So that's about 130 pips. And then that projected above the neckline is where your price projection would take you. So this would take you towards 71.80 here, which pretty much coincides with this prior level of support and resistance. So this gives you your more conservative price projection should we see a close above the neckline of this inverse head and shoulders. If we see a move above that level, then the next price projection target potentially would come from the move from the head to the neckline. That's 68.30 to 70.50. So that's what, 220 pips. So that would take you then to 72.70. and that brings you back up towards these levels here. So let me just put this on about 72.70 we said, so that takes us up to around these levels here. So this gives us our more aggressive target for the price projection should we see a break of that neckline. Now if I'm being perfectly honest, the fact that that falls above the descending trend line here, that the pair is traded below, would oh no, it doesn't. So that takes us, sorry, my apologies, that takes us back up towards these 72.70 levels, which does coincide with these prior levels of support and resistance. So again, this could be a technically very interesting chart now for the in the coming days or over the next couple of weeks. And if it coincides with more gains in oil, then that would certainly help that technical move to the upside should we see a break of that neckline. Dollar CAD next, and again we are seeing the rallies in oil benefit the CAD. Of course, the oil industry makes up around 13% of Canadian GDP, so it's not surprising to see the Canadian dollar benefiting from these stronger oil prices. It's certainly suffered enough during the decline. Now the next technically significant level here is going to be these 140s. Prior level of resistance, 38.2% Fibonacci retracement level, and also a key psychological level as well. So there you've got the triple threat here at these 140 levels. Now again, I do still think this is going to be primarily at this stage driven by the moves in crude, but we could see a bit of profit taking potentially at this level, or if the market is still bullish, then this could be an area that the market then starts to rebuy at. It'll be very interesting to see how we do react to this 140 level. If we do see this broken, then the 50 fib around these 137.50s towards the prior level of support around 138. So 137.50s to 138 would then become the next notable level for me. But like I said, I do think this is going to be primarily driven by what's happening in crude, which is why I do think no matter what you're trading, whether you're trading the dollar CAD, the Australian dollar, whatever, I do think it's very important to keep an eye on what's happening in crude right now. A couple more commodities that we've seen some interesting moves in today. One is gold. Now we've seen it break above those prior highs. The great thing about this is we had the Fibonacci retracement level in place here, and it bounced off the 61.8 fib of the move from these lows on the December 3rd to the highs on January the 8th. It bounced off of this level and it has continued to climb since. Now what I highlighted in the previous video on Monday was that if we do see it trade above these highs, which we have seen now, the next interesting level would be the 50 fib. Now what makes the 50 fib level interesting is the fact that when you do tend to see these trending markets, and there's no doubting that gold is in a downtrend and quite a nice downtrend at that, the fib levels can often offer opportunities for people who are maybe opportunistically seeing in a bear market looking for an opportunity to buy, and then these could be the levels at which you might see some profit taking if you're seeing people who are more trend followers, and they've already taken profits, say at these lower levels, and they're looking to get it back into the market. Then they may look to get back in at prior levels of support and resistance, or at these fib levels, or around a moving average. But these fib levels can be quite an interesting level for these instruments, just because you do tend to see a lot of interest being generated at them. Now that doesn't mean that we're going to see a reversal to the downside off this fib, and as you can see, we're actually starting to trade above it. And moreover, if we look at the hourly chart, we've already seen one reversal off that 50 fib, and we've already seen it pull lower once again. Now it will be interesting to see if we can sustain a move above it at this level. The MACD histogram on this hour chart suggests that we are losing momentum the closer we get towards this 50 fib, and this most recent attempt to break above has come on lower momentum again. And you can also see on the moving averages that that comes up with the same bearish divergence. But that alone doesn't convince me that we are going to see a reversal off this level. I would need to see some confirmation in terms of price action as well. This is quite a bullish candle leading into the 50 fib, followed by a candle of indecision, but we are now trading higher once again. If anything, I'd have to perfectly be honest and say I think I'd be more leaning towards the bullish side, although I'm not really convinced by either at the minute. I think this is a difficult one to call right now. I wouldn't be looking potentially personally, I wouldn't be feeling overly bullish. I wouldn't be personally looking to necessarily get long at this level, but I haven't seen anything in the charts, anything in the price action that would convince me to be bearish at this stage either. If we do see a move above here, then I will be looking back towards these 1136, 1135, 1136 levels. Again, 61.8 Fibonacci retracement, prior level of support, and you've also got the 200-day simple moving average in there as well for good measure. Finally, silver. We've seen a very bullish break in silver today, so I wanted to highlight this. This is the period of consolidation which I've highlighted on the previous videos. We've seen 2 attempts to break up through this over the last couple of days. Both of them have successfully moved above the resistance level, but failed to close within us and failed miserably, I should say, on Friday. But we have seen an aggressive break today, and what an aggressive candle that is. If we can see a close near the highs today, then that is a very bullish candle. Now we could see some consolidation tomorrow, which you'll quite often see following a Marubozu candle. You see a bit of consolidation off of this level, but that doesn't mean that it's necessarily bearish. And for me, if we see anything that resembles this in the slightest, I'll be feeling very bullish for silver right now. The next obvious level being 1464, being these previous highs. But if we can see a break above that, we may be looking up towards these 15s, where again we've got this nice psychological level coming into play, but we've also got this descending trend line as well, which takes us back to the August 25th highs. For more in-depth news and analysis, check out OANDA MarketPulse at MarketPulse.com. You can also find out more about OANDA and sign up for a free demo account at OANDA.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.